Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden within corporate filings. And today we're looking at a company that seems to be playing a bit of a shell game with its own existence. You might think it is just another day at the CC, but stick around because this filing has some interesting moves that could change everything for its shareholders. And before we dive in, if you are new here, make sure you hit that subscribe button. We break down these complex documents so you don't have to. Also, we have a fantastic Discord community linked in the description below where we discuss these filings further. We're diving into a Form 8K filing from Crest Acquisition Corp V. Now, this is a specific type of report that companies file when something important happens that their shareholders need to know about right away. Think of it as a company's urgent news bulletin. So, what is the big news from Crest Acquisition Corp V, or MSAG as they're often known? Well, it all boils down to a vote by their stockholders and some pretty significant changes to the company's foundational documents. The main event here is an amendment to the company's core charter. This isn't just a minor tweak. It is a fundamental change to how long the company has to achieve its main goal. This company is what is called a SPAC, or a special purpose acquisition company. Their entire purpose is to raise money, go public, and then find another private company to merge with, essentially taking that private company public through the SPAC. They have a limited time to do this, known as the business combination period. What they've done here is extend that period. Originally, they had until the 16th of November 2025. To find a merger partner. Now, thanks to stockholder approval at their annual meeting on the 4th of November 2025, they've pushed that deadline all the way out to the 16th of November 2026. That is an extra year to get a deal done. This extension was formally approved by the shareholders. On the 7th of October 2025, there were over 2.9 million shares of common stock eligible to vote. Out of those, more than 2.5 million shares, about 86.45%, were represented at the meeting, either in person or by proxy. This shows a pretty good level of engagement from the shareholders. Now, let's look at the votes. The proposal to extend the business combination period passed with a significant majority. Out of the votes cast, a whopping 24,39847 were in favour, with only 11,100 against. This means the shareholders are giving management more time to find that elusive business combination. It is a common move for SPACs when they're struggling to find the right deal within their initial time frame. They're essentially buying more time, but it also means shareholders are waiting longer for any potential returns. Beyond the extension, they also voted on electing a director. Suing Liu was approved to serve until the 2028 annual meeting. The voting results for this were also overwhelmingly in favour, with 24,50947 votes for, and no withheld votes or broken non. Votes aside from the company's internal figures, this suggests a strong endorsement for the current leadership, or at least a lack of organised opposition. And finally, a pretty standard procedure. Stockholders approved the appointment of WWCPC as the company's independent registered public accounting firm for the year ending the 31st of December 2025. This proposal received unanimous support with 25,08855 votes in favour and 0 against abstentions or broken non-votes. This is a good sign that the financial reporting and oversight processes are in place. Now, something else that happened in conjunction with this meeting was share redemptions. When SPACs extend their deadlines, shareholders often have the option to redeem their shares. This means they get their initial investment back rather than waiting for the merger. In this case, 28,981 shares of the company's publicly traded common stock were tendered for redemption. This is a pretty small number compared to the total shares outstanding, which is likely a positive signal. It suggests that while some investors might be impatient, a large majority are willing to wait for management to find a suitable merger. This actual amendment document, Amendment Number 5, is filed as Exhibit 3.1. While we won't go through the legal jargon, the key takeaway is that it legally solidifies the extension we've been discussing. It is the official document that makes this extended timeline a reality for the company. Now, looking at this, Crest Acquisition Corp V is essentially in a holding pattern. They've successfully navigated the hurdle of extending their merger deadline, which is a critical step for any SPAC that isn't ready to announce a deal. The high level of support for the extension proposal indicates that the majority of shareholders trust management to find a suitable partner. The relatively low number of redemptions also suggests confidence that a deal will eventually be struck, or at least that shareholders are willing to play the waiting game. However, the core risk for any SPAC remains the successful completion of a business combination within the new timeframe. If they fail to find a suitable merger by November 2026, the company will likely liquidate and shareholders will receive whatever assets remain, which could be significantly less than their initial investment. The market for SPACs has become much tougher, and finding quality targets at reasonable valuations is challenging. Management's ability to execute effectively in this environment will be key. In conclusion, Crest Acquisition Corp. V has bought itself more time to fulfill its purpose as a SPAC. The shareholder vote was decisive, showing confidence in the company's leadership to navigate the current market conditions and secure a merger. The company's direction is one of continued search and potential transformation. The primary risk is the ultimate success of finding and closing a business combination. Alright? That is our breakdown of Crest Acquisition Corp. V's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they'll find a good merger target? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.